We're going to give about 2 more minutes and then go ahead and get started. Um, I apologize for the delay, but we have technical difficulties. So the layout of what we're going to do today is basically, excuse me, going to be going through some of the trades we made this week, um, why we made them, should we have made them, and how can we better position ourselves in the future to get not burned by the open price. Um, and I'm talking about more for day trading of getting in at the open price, how I think it'll be better if we wait probably 10 to 15 minutes after open and then get in later. And then, of course, tracking the same stock or some of these stocks throughout the day for an overnight hold. That can also be a possibility. Um, so if during the call you want me to chart something, go ahead and do it on the WhatsApp or even here on the GoToMeeting. You can chat here as well, and I'll go ahead and chart them live as soon as I get a request. But I'm going to go ahead and start um, with the charts that we did this week. So I'm going to pull up some of the charts we've done. And you guys can see my screen, right? Can you guys on the phone see my screen?
Yeah, I can see it.
Okay, perfect. So we're going to start from all the trades we made 13th or even the 12th onward. So start with the 11th. Let me pull up that chart. The first trade I made was CNXT. I think I did an overnight hold on that one. Excuse me. CNXT. Make sure I'm in the right here. Yep. Let me just scroll down. Okay. Pull it up. TNXP. This was done on the 11th. So let me go ahead and convert this to the 11th. And this was sold on the 12th. Oh no, this one, I apologize, was bought on the 11th at open because of some news or pre-market activity, and I sold it within the first 20 to 30 minutes because of the big drop that it had. So let's first of all go through the steps of what we usually do when we see the first candle of the day. The first step, no matter what, is to draw your resistance. And I think this past week has been a very bad week for me, trading-wise, because I have not taken the effort to draw my line correctly. And if I had done that, I would have recognized some of these losses and would not have gone in at all. So TXNP had big volume pre-market, and I believe it's related to some news. I'm just make sure where the line is supposed to be. Open price was 578. So let me move this up to 578-ish. So that is basically where our resistance is. The first 10 minutes told us that if it goes above 578, that's when we'll get in if all of the indicators say so. As you can see here, after the first 10 minutes, it dropped down and it never recovered since then. So this stock would have been a no buy, even though it had pre-market volume and some pre-market news. As soon as it opened, people dumped it, and it did not recover since then. So right off the bat, I took a loss last Wednesday because I was not disciplined enough to draw my line. And I think this is a trade I made without looking at stock charts. I just made the trade as I was traveling somewhere. It was a very small amount. Didn't get in with all my money, but it was still a undisciplined trade that should not have been made. Let's move on to the next one. NADL was a stock pick that was purchased on the 12th. NADL, and this was, I have this one saved. I have some notes on this one as well. NADL. Okay, let me look at the one with my notes on them. NADL. Okay, perfect. So NADL for us was a overnight hold buy, but pre-market of the same day of the 11th, it had some big news. And the news basically I put on the screen right here was it was rewarded a drilling contract, and I spelled contract wrong, with Conoco, I spelled that wrong too, Phillips. So because of the contract that was given to ConocoPhillips, the news came out right around 8 a.m. There was a big volume that built into this. And I'm going to pull up FinViz right now so we can see what the float was for this stock. And that's another thing that we don't really focus too much on is the float. If it matches a lot of our criteria and the float is low, we know that it's going to spike up no matter what. And so the float for that day, and as we can see right over here, let me circle it, 7 million shares. So 7 million shares, of which, let me go back to here, volume for that day was 25 million. So you have 7 million shares being recycled up to 25 million. So you know this stock is going to move, and it's going to move really, really quickly. But being a disciplined trader, for that morning, you would have made your resistance line right away. So your resistance line would be at the first 10-minute bar at 245. If the stock goes above 245, that's when you run with it. As you can see, the next bars, it didn't come close. Around 1 p.m., it touched the line, came back down, and towards the end of the day, again, is when it made its presence known, went above our resistance, and that's when it was alerted for an overnight buy. And I think the next morning we can look at that chart as well. Because of the news of the day, because of the low float, and because of the late buying pressure, this was almost a no-brainer for the next day. And I believe, we would have bought it. Actually, we did buy it around 270, and you would have sold it around 330 at open, or if you would have held on a little bit more, 390 was the high of the first 10 minutes of the next day. So this is a example of, now I got into this stock early morning as well, but it was a small amount and I held it all throughout the day. I added more towards the end of the day when it was alerted it was a buy, and went ahead and held it for the next day. So this is a case where news alerted us early morning of a potential big move. It didn't happen the first 10 to 30 minutes. We wait, and it looks like at the end of the day, it was able to pop up and give us the buy signal. And if we were following this now, going forward, whatever stocks I'm looking at, I'm going to save this chart with the resistance line in stock charts. And I'm going to create a new uh, warehouse for it, and I'll send out the name of where I'm saving it. So that morning, all you have to do is log into stock charts, pull up that chart. You can click on auto refresh on and leave it on in the background. And as the day goes on, you can double check to see where the stock price is relative to your resistance line, and we can make the buy and sell decision and see where we want to go with that. So I'm going to set that up tonight for tomorrow morning buys and sells. Anyone have a question? I heard someone try to get in or something.
Yeah, can you hear me?
Yeah, well, I can now.
Okay. I don't know what's happening before. Why do you always set the resistance line where the box? Like if I'm looking at the resistance line, so you don't set it at the highest point, right?
Correct.
You set it at the top of the box.
Because, yeah, and that's because right when the market opens, either you'll get a lot of buyers, and that's what happens.
Or something like I don't know about everybody else, but I can barely hear you.
Oh, is this better?
Yeah.
Okay. Hussein made a comment that I was breaking up. Does this sound a lot better?
Yes, it does.
Okay. Perfect. So the first, usually the minute, 2 minutes of the day is when all the orders from the pre-market and the orders were that were put in as the market closed go through. So usually you'll see a huge spike within the first 5 minutes, in this case the first 10 minutes, but where it ends in the first 10 minutes is where the buyers and sellers have agreed to be the equilibrium price. And this is just a more aggressive approach. You can easily put that up, or you can have your range from the high point to the open point, and have that range in the back of your mind. Say, hey, if this touches this range, I will reevaluate. But from back testing, this bar right here gives a good enough balance to you can make some profit and not have to wait for another 30% swing to get in. Because if that was your threshold, you would have never bought this stock because your line would have been close to 280 and it closed below that price for the end of the day. So back testing allows me to be more comfortable with that first bar the way it is. And we'll see examples going forward where maybe if we would have set the bar higher, we would have stopped a loss. But you're not going to be 100%. You're going to have some losses, but we have to make sure those losses stay small enough to when we have these 20-30% gains, we can easily cover those losses. So just a quick review on this of how much potential we could have had if you would have bought at close. We are looking at a range at open of the next day at 23%, close of the first 10 minutes of the next day at 35%, and the high of day, which was the high of day of the next day, at 44%. So depending on when you got out, the minimum you would have made was around 23%. So that's a pretty good hold overnight. And I'm sure pre-market and after hours, we saw a lot of movement as well, where you could have gone out for a little bit more or a little bit less profit. So any questions on NADL? Okay, perfect. Is that a question? Okay, let's move over to the next one. That was NAK. I bought this one, and let me see which one is the one that I have my lines on. Yeah, this one right here. So NAK was an interesting one. Let me pull it up in FinViz to see what the news was for NAK for the 12th. So NAK for the 12th, so on the 11th at 6:15 p.m., we got news that the state of Alaska approves the Pebble project, which is a big project that this company was working on for a land use permit. And as you can see, for the history of this stock, at one point it was at close to $3.50, and all of a sudden it drops down to $1. That was because the EPA in the state had declined them permit use to drill in that area of Alaska. But now they had a little bit of reversal, saying that you can use it, but they have more restrictions now with that use. So that was great news for this stock. And we knew that this stock was going to basically explode it at open or the first probably hour of the day. And this could be a great buying potential. The other thing, if you can look at this white bar the green box right here, it was in the pre-market crossing right above that moving average. That's a great sign that people wanted to buy this stock. It was positioned the right way, and the catalyst was there to push it above. And again, we would draw the first line after the first 10 minutes, and of course it was a black box, so basically it was higher than yesterday, but it was still a negative first 10 minutes because people are either covering their shorts, buying, selling, whatever they're doing, and that's where we would draw our line at close to 155. We would wait until we get a clear buy signal over that line. And we had to wait for basically 10, 20, 30, 40, 50, 60 minutes. The 60th minute gave us that signal of a white box that closed well above our resistance line. We look at the volume up here, well above the average. As a matter of fact, the last two volume bars gave us really good volume to get above that line as well. MACD was positive, RSI was green, stochastics was above the 80 line. Everything was moving in the right direction. And so you would get in right over here around 158, which is, you could have gone in earlier within this box, but if you want to be a little bit more conservative and wait for a pure signal, that's what you would be waiting for. Our sell strategy is usually waiting for the 8-day average. If we see a negative cross in the 8-day average, we like to get out. And the next opportunity to get out was right over here around 12:30 Eastern. So 11:30 a.m. Is when the red box touches the 8-day average for us to get out. Now, if you were to follow this and you saw this rise up and you saw a huge black a red box right next to it telling you that people are getting out, at the same time you saw a really long orange candle for volume, meaning a lot more people are getting out. Stochastics is now crossing negative. At the same time, you see RSI starting to go back down. I would just get out at the end of those 10 minutes. right over there. So when I see that box, I'm already up 11.4%. I'm just going to call it a morning and get out of that stock. Simple as that. Again, you could have gone out at any of these points here, or even at the top of the 10 minutes before to get out, and you could have just gone out then. Completely up to you. A lot of people like to have a trailing stop loss, where if you have a trailing stop loss at 5%, anytime the stock drops 5% from the highest it was previously, it's going to sell by itself. So this way, you secure some profit, and if the stock would have, or my broker would have seen this movement here, it would have automatically stopped out at 5%, securing all the profit I've made so far. It depends on your risk level. You can have a 2, 3, 4% level if you want, but a 5% is a good gauge to give you some cushion in case there's a lot of selling and buying going on. So this would have been an easy buy and easy sell, a little bit of longer hold than we usually do, but it's easy 11%, before lunchtime, basically. Now this would have been a candidate for, let's see if this would have been a candidate for a overnight hold. I'm not sure if it was or not, but let's see. Cheyenne Strategy has over 10 million volume, which it did at 24. Stochastics red is below the black. You have a positive last hour. I would say yes to that, but let's see what it did if you would have held the next morning. I know in pre-market it did go up, but I want to see what it did. I want to say, well, if you look at the MACD is not positive. This would not be a buy for me personally. I don't think it was an overnight buy. But let's look at the 13th. And I do want to say it opened lower, I believe. Yeah, it opened lower down here. Not by much. If you would have gotten in back here and still held it, you would have been okay. But you would have lost money overnight on this one, unless you had an opportunity for pre-market gains. You could have done that. But on the daily, on the day trading side, you would have made at least 11% profit. Any questions for NAC? Okay, perfect. It looks like someone's trying to talk, but I can't hear them. Okay, maybe not. Okay. Okay, so DRYS was another one that we held overnight. And this one, if you would have sold that open, you would have lost money. If you would have waited probably like 5 minutes after open, you would have made money. And you would have, I think throughout the morning, at least the first 30 minutes, you had chances where it came back and you could have broken even. But since we sell that open, this one you would have lost money for the overnight hold. Now, this stock on that day, which was the 12th, had some pre-market activity, had some buzz, so volume was getting up there in pre-market. But when it opened, it just dropped. But again, if I see it on FinViz and if it's on the first page, I will most likely start drawing lines on it going forward. And this one, again, like our rule says, the first 10 minutes is where you draw the line. And that's where we drew the resistance line. And once it gets above that line is when we start to look at, is this a buy potential or not? So this stock right here, we drew our line right at around, these are adjusted prices, but right over there. And it did not cross our line fully till the last probably hour and a half or the last hour of the day. So the last 10, 20, 30, last 40 minutes is when it would have spiked up. You would have seen this great white candle. MACD looks really good. RSI is positive. Stochastics is above. Volume is above average. It's a go. And you could have gone in right over here and made a close to probably between 15 to 19%, depending on where you sold, just in the last 40 minutes of the day. So if you already had this gain in there, or you saw the candle a little bit higher and you got in, even with the low, even with a drop at open, you still would have secured profit because you got into at a lower rate. Pre-market, you had opportunity to sell for break even or a small profit as well. And I'm not sure about after hours, but I think it was up and down after hours as well. So you had 3 really good opportunities to sell. Worst case scenario, you would have lost a little bit of money, which is okay because you would have gained 20, 30% on other trades to offset this anyways. So this was a little bit riskier. Last 10 minutes was a red candle, so that's something I would have looked at. But if you look at the last hour, it was a big white candle that was signaling a buy based on the volume, the stochastics, and all the other criteria we look at. But this one would not have been a buy until the last 40 to 50 minutes of the day. It gave you a little heads up right over here around 1:30 p.m. RSI was still waiting. It had just cleared the zero line from MACD. Volume was there. Stochastics was getting up there. So it was just getting you ready. Now, it had the 55-day average coming down. So that was the resistance that I was waiting for to cross. And what's really interesting is the 65-day average and our resistance line converge right over here. As you can see, the 65-day average goes here, and the stock price goes above. So our line merging with the 65-day average, stock price closing above it, just gave it the green signal to go further. And I think it added majority of its volume in the last hour to get above that 29 million range.
What did it open the next day
at? The next day, it opened at, let me see, 13. And let's see how much you would have made or lost based on that. So you would have lost, let me just draw a line here. So you would have bought around between 220 and 215, and it opened the next day. Let's see, let's draw this line here. It opened the next day at 210. So even if you got in around 217 even, you have lost 3.52%. Which is nothing. And again, 10, 20, 30, 40 minutes later, it gives you an opportunity to make some profit. But we don't hold for that long, especially if the morning is a little bit dicier. We already see that this is so far above the 8-day average that it's going to touch the 8-day average. It's going to come down to it because of this big run-up that it had. And of course, people are just going to take profit. So that's basically what happened. People started taking profit pre-market, and it just started going down after that until it opened. So if you would have gotten in right over here, you would have made a 8% profit. If you would have gone in at close, you would have made a 3.5% loss. So even with that, it's not that bad. Any questions for DRYS? Perfect. So next one on the list was CBIO. And I believe I charted that one here as well. If not, we can do it live. CBIO. Okay. So let's do CBIO. And this was on the 17th. So CBIO on the 17th. Yep, again, this was not a disciplined trade by me, but let's see. So the first rule, let's see what the news was for CBIO. We can go from there. CBIO on the 17th. Okay, so there was no real news on the 17th. So what was going on the 17th? Looks like there was some pre-market buzz. Yeah, it was close to the $18 range on the 17th. So no real catalyst, but it had a lot of pre-market movement testing the new highs. Let's see what happened. CBIO. Okay. So the first rule that we have to live by going forward is drawing the first line at the 10-minute mark. And the departure from the norm now is usually we try to get in right at open. I think that's what we need to tackle is the fear of missing out. And a lot of our well, at least my trades, I can't talk about your trades, but have, at least this week, have been influenced by the fear of not hitting my weekly goal that I have set for myself. So if I'm going to hold myself to a goal, automatically I'm going to, oh, yes, sir.
Can you move the screen a little bit down? Can see. I don't know if you're trying to explain that or not.
Oh yeah, I was gonna move that down a little bit later, but yeah, that's fine.
Okay.
Was that the fear of missing out on that big run, the big 20, 40, 50% gains, makes you do a lot of risk taking that you may not otherwise do, and I think that was my theme this week, was taking that additional risk and trying to get that next HTGM for a 100% gain, or the CBLI for a 200% gain early, and I think that's what really caused me to have some decent sized losses. I mean, this is only a 20-cent loss, so it's not that much money. And when I'm doing this stuff, I'm only playing with 15, 20, 30% of my capital, so it's not that much to go with. But a loss is still a loss, and if you start taking these shortcuts, then they start becoming habits. And if they start becoming habits, then they're hard to change. So I also need you guys to hold me accountable when you see me do a trade that doesn't make sense, is to call it out. Because I may be too blinded by the fear of missing out. I'm going to do the same with you guys, that I'm going to make a bad trade. And if I'm making bad trades and someone else is following me, they're going to make bad trades too. So we got to be in this together to make sure, hey, I don't follow that trade. You need to draw your lines. And then the lines will tell you everything. as in this case. Opened up the first 10 at the black box. Okay, we've seen them bounce back up above that, so that's where you draw your line. And throughout the day, it never touched it. It did not even come close. This would not have been a buy. A, you would have saved a day trade, and B, you would have saved a loss. So when you have 3 day trades within 5-day range, if you have under 25,000, then day trades are worth a lot of money now, right? So the supply and demand, you only have 3 to spend for the week. Do you really want to risk spending on CBIO? The answer is no. I rather make a good decision and lose money than a bad decision and lose a day trade any day. Because a good decision was not my fault. It was more market reacting to what was going on. I did my due diligence. I drew my lines, and the market just reacted that way. And rather than just, hey, there was no real news, first of all, just some pre-market action, and I got in on a bad trade, burned a day trade, and now I'm done for the week. And if there's the next day, CBLE goes up the next day, I cannot get in because I don't have any more day trades. So I took a 10% loss. Then the opportunity cost for that was a 200% gain the next day for CBLI. So my selfishness cost me 210%. And that's the way I think our mindsets have to be going forward. Now, overnight holds, you could do that every single day because that's okay if you have a margin account. That's perfectly fine. It's the day ones that we got to really focus on and get them right. So CBIO was not a buy at all. Never crossed our line, and nothing to say about that. Unless you guys have any questions on CBIO. And I mean, look at the stochastics. Negative stochastics. I mean, CCI going down. It was not a good buy. And I think what I'm going to start doing now going forward is pre-market action. Those charts will be saved in the pre-market. So when the market opens, you don't have to wait for me to chart the stock. The charts will be saved, and right after within the first 10 minutes, the line will be there as well. So if you know what I'm looking at, you can know those lines yourself as well. And that's the goal, to have you guys know exactly what I'm going to do and do it before I do it, so you're not waiting on me to do it. And this is the first step, is drawing that line. And once it goes above, that's when you know, hey, alert, 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 something's going on. Let's get into it right now. So let me close out of here. The next one on my list was, of course, CBLI. That was actually a buy on the 17th. So let's look at CBLI. I think I have that one saved. CBLI. Yep. This was a beautiful, beautiful trade. And again, you would have missed this if you would have burned your day trades on CBIO and other stocks in the week. You would have not seen this opportunity come through. So again, on this one, there was a lot of pre-market action. So CBLI for the 17th. What did we see go on? Yes, at 7:30 in the morning. 2 news announces European Medicine Agency positive opinion regarding their investigation plan, blah, blah, blah. Announces commencement of Vivo biocomparability study. So 2 big things. again, people usually just follow the headlines. They don't really take the time to read what's going on. So the market has already made a decision in the morning. So European Medicines Agency, positive opinion, and they're going to start commencing the study because they have positive news that it's going to go through, or they got funding to do the study, whatever may be the case. We just care for that news, and the other main thing is that share float. Their share float for this stock, 4.42 million. So 4.4 million shares available to do anything with, and the volume for that day for CBLI was 39 million. So if you only have 4.42 shares and you trade at 39 million volume, every time that stock gets recycled, the price for that share goes up and up and up and up. And that's why you saw a jump from open, and this is not even from previous close, because I believe the previous close was even lower than this. You saw a jump from open from about $2.04 to the close of $4.80 for that day. For the day itself, that's a 200% gain, or 100 and some percent gain, 207% from previous close. But doesn't match our test, and that's what we got to focus on. So you will draw your first line, and let's draw the lines here in real time. I'm going to annotate. And let me clear all my lines. So the first line, at the first bar, right over here. So that's your first line at the first bar. Now, I'm looking at, and I'm going to scroll down a little bit here. I'm looking at the stochastics, is below where I wanted to be, but that's fine. The volume is good. Stochastics is below. Everything else looks good. MACD is above, RSI is above, so let's go. So, and this is one case where, since this box is so low, so small, maybe you want to be more conservative and draw your line up here at the high point of the day. Instead of seeing a big, black box or big red box, if you see a small white box, maybe you do want to be that, take that conservative approach. So let's see. The first bar here, no buy, hasn't really cleared, but yeah, it's a good sign. Red bar, red bar, red bar, bounces off again. Right here, and I'm going to draw my vertical line right here, would be basically the first time I would buy. Volume is good. Stochastics is right at the 80 line. Everything else looks good. So let's get in. You get one touch right here to the 8-day average. Now, what I'm looking at here is, what are the other metrics telling me? Okay, that looks bad. The orange bar is below the average. As you can see, the orange line right here is the average trade volume for that time period. It's below average. This is a classic sign of people taking profit. If I were to see this orange bar at 1.5 million, or even higher like we did at the beginning of the day, that's a big concern of you just getting out, because more short sellers are coming into the market, and they're shorting their stock. So we saw that up here. So we saw these small downsides, but huge volume, people taking a lot of profit. We see the same thing here. We see stabilize, 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 hovering over that 8-day average. So if you would have sold here, I would not have faulted you for a second. You would have lost some money, but I'd rather lose money on a trade that I'm comfortable with than risk it on something bad. You would have lost 7.5%, and that's fine. But this is stuff that you would have been looking at the whole day anyways, because it's one of the ones that you were invested in earlier in the day. You would have seen it go sideways, a little bit higher, but at this point right here, it made the high of the day. So if you know how to draw your support and resistance line, you would have done a step ladder approach basically right here. So I would have had this as my first resistance, this as my second resistance. Once I see some action above my resistance line right here, at the same time, look at my stochastics. It's approaching the 80 line. The volume is above the average, which is a good sign. The MACD is coming back and recrossing, or at least getting together. RSI is coming back up. This is what you call a consolidation. If things are moving, getting into place where the buyers are coming in and wanting to get a piece of this action, and you see that breakout right over here. And I think this is the time where we talked about in the group that, hey, CB or CBLI is moving. It's the height of the day. At that point, it's time to get in. And if you would have gone into stock, even at the end of the day, I think this was a candidate for an overnight hold. You would have actually lost money on this one. But the pre-market would have been a good sell opportunity, and even after hours would have been a good momentum push to get this stock. I think it touched $5, if I'm not mistaken, either after hours or pre-market, where you could have made some money. But the real money would have been made on a day trade here towards the end of the day when you see it pop up, even right here, even up here. I mean, that's a good cushion, a 20% cushion in the last 30 minutes of the day. This stock was on our stock chart scan. It showed up, of course. I mean, once it gets to this level, it's on your scan for FinViz as well. Throughout the day, this would have been probably the top 3 stock to follow throughout the day. And if you would have checked in on it around lunchtime, towards the end of the day, you would have seen this gradual increase, and you would have, or I would have taken a risk in seeing what this has to offer at the end of the day for an overnight or an aftermarket hold. And right over here, all I see is white boxes, and all I see it going higher than it was before. It's time to roll the dice and just get in. If you would have just done that, that's a 30% gain right at market close. I mean, that's one thing that you could have made really good money on without really taking on too much risk. And again, your sell point is the 8-day average. So even if you buy here and you're not comfortable, 8-day average is only 5% away. As you get higher, the 8-day average is now 10% away, and 15 and 20 as you get further up in the price range. So, I mean, if you have a trailing stop loss at 5%, if it ever goes down below this, it's going to sell by itself, and you'll recoup some, and you'll still have some gains. But this was a perfect overnight hold. Pre-market, you would have gotten out with some profit or at least broken even, but it did open lower the next day. And let's see how much it opened lower by. On the 5. This was, what day was this stock? I believe it was a 17. 17, let's do the 19th, and then because it again did bounce back today, which was interesting. So look how far back down it came. It came right back down to the 8-day average. So you would have lost some serious money at open. The next 10 minutes, you would have broken even. Yeah. But the juicy stuff comes again today. It was a really good buy if you were able to get in. You would have broken through all your resistance. And we'll go through today's chart as well to see when you would have gone in and gone out. And I know people were alerting for CBIO throughout the day. I just didn't have a chance to look at the chart. Otherwise, I would have probably gone in and made some quick money. But I do want to see now if this was a, I'm not sure if this was overnight or not. Let me look at the hourly because that's what we base it on. And let's go back to the 17th. So 17th, last hour looks positive. The stochastics, black is above orange, yes. Everything looks perfect. It was a buy for overnight. And I think pre-market, hopefully people got out. Because I know at open, a lot of people took profit. So. Any questions for CBIO? I mean, CBLI? Okay, perfect. Next one, OHRP, is the one I personally bought. And if I would have sold at the right time, I would have made good profit. But I did not sell at the right time. Took a loss on that one as well. And again, that was undisciplined of me to do. I should have sold when the time was right, and I did not. So I want to look at that. OHRP. And we're going to look at it on the 10-minute chart. And this was bought on the 18th. So let's look at the 18th. Okay. And we're going to look at the default view. Of course, got to change my date again. I mean, you know, with my experience now with FinViz and stock charts, FinViz is great for pre-market and researching, quick trades, but you're not going to beat the charting capabilities of stock charts, especially if you want to look at a minute, 5-minute level. I mean, we're getting data fed directly from NASDAQ with the plan that I have on here. So it's the faster data you're going to get. Other than if you have like, for example, I have a Stock Trader Elite and E-Trade Pro capabilities on my trading platform, but you know, I can't really look at that on my cell phone. It's a desktop client that I have to open up. Other than that, this is the best shares I'm gonna get. So let me add one more day on the backside so we can see the full chart. Let me add 17th on there. And again, I bought this with discipline. I just didn't sell when I should have, and that was the issue. I got too greedy, and there was no real news behind this stock. The only reason I got into it is because it was testing the moving average at $1, and $1 is usually a psychological barrier as well. So I wanted to play on that a little bit and see if I can make some quick gains. And right here is we can draw our lines. So again, the first rule is to draw our line on the first box, which is wrong line, horizontal right here, first box. And it's right around between $1 and 102. So the first hour went up all the way to 108, but our first box was broken right there. The next hour opens above our line. So that tells you two things. A, okay, psychological barrier is broken. It's going to move up. It's time to get in. You have your volume spiking. Stochastics, however, is not at the 80 point yet. That's a big thing. Stochastics was not there. CCI was, MACD was, RSI was, and I got it around $1. It went all the way up to $1.12. That's a 12% profit right there. I could have banked in first 10 minutes and made some quick money. I did not. The next 10 minutes, it went back all the way down to $1. I should have taken the break-even point right there, sell out, and not lose money. But I held on for a little bit longer, playing on that $1 psychological fear factor, see that, hey, let's see if it comes back up above it, and it never did. I could have, so I went from positive 12% to break even to now negative 7-10%. So that tells you right there that you have to be disciplined. You have to be disciplined. If I would have had my stop loss at 5%, I would have captured at minimum 5% gain from the highest point that it went. So it would have looked at 112 and would have, if I would have gone down 5% from that 112, it would have sold automatically. So I would have captured some gains and not have to wait for an 8% loss. And not only, it's not the loss that hurts, but since I'm trying to turn a small account into a large account, it's the day trades that really hurt more than the loss do. The loss I can make up, but if I don't have day trades to make up that loss with, I'm not going to make up that money. And so that's why this was a undisciplined buy. Even though I would have made 12% at a point, there was no news pushing it up, so no catalyst, and no real volume that helped me get over that that hump of the $1 psychological level. So this, in my opinion, was not a good buy. It was a bad buy, basically. Any questions on OHRP? No, perfect. So the same day, I bought IDXG, and I think this is a really good discipline buy on my part because I follow my own rules. It's just that I didn't get enough of the shares to really make a dent in it. So we bought this on the 18th. Let's switch my dates. And so let's draw our lines. And this stock has a lot more of a story to it, which is really interesting. So we'll talk about that as well. Our first line right over here at the first box. Again, this box seems small to me, so I may want to draw one up here as well, just to be more conservative and give me some more peace of mind. But let's see what happened on the 18th that really drew the stock up to the next level. IDXG. We have some pre-market movement here. On the 18th, announces coverage of Thyra with United Healthcare, meaning if United Healthcare will now reimburse doctors and hospitals and patients who are using this particular drug to treat, I think it's thyroid cancer. That's big news. Last time a news came out like this with this company, it was with Aetna, and this stock went up, I think, like 600%. It went up big. So the potential here was really, really large for this stock. So knowing all that, of course, you would have gone in right here, right after it passed your line, and seeing the strong volume. Stochastics is above. MACD, RSI, everything is in favor. I mean, in 10 minutes, you could have been at 15%. If you see this red candle, let's say you sold at the bottom of that red candle, that's still 8% gain. If you would have held on and waited for the stop loss at the 8-day average, which is right here, that's an 8.6% gain. Or if you're waiting for the little dip, sold over here, that's 22% all the way up to 26. I personally, this would have been my sign to get out and secure profits. 8% is good for me. Volume was good. This red box was above the average, so it tells me that people are really selling this, taking profit, but more people taking profit than anything else. The next green bars help it get support, and then bam, it drops big time from 420 all the way down to 320, and at the very low of the day, it touched 270. And this was not because the stock sucks or because the drug sucked or anything like that. It was because 1.9 million shares were added to the float at the rate of $2.20. So this company had restructured its debt in March or in previous quarter or months, and they were exercisable after the 29th of March. So the deal was that they sold some of their debt, and the person holding their debt had the option of taking cash or converting the debt into stock at $2.20. So when this company that saw this stock rise going to $4 and whatever cents, converted their shares, at least 1.9 million of them, to $2.20. That drove the stock price down big time, added to the float, and the stock had to be halted because of unusual volume activity. And that was the volume activity, the 1.9 million shares at one point coming through at such a low rate. And when you have something like that, it just dilutes the whole value of the stock. You have people, so you have this going down. At the same time, people who have stop losses, like if you had a 5% trailing stop, it would have been triggered. And when you have 1.9 million shares coming in already, and then hundreds of thousands of other shares being stop losses going off on them, it's going to halt. And when everything came back up, the stock was at $3.20. It never recovered after that. And when you have something like that, and let's look at the volume. Look at the volume. It just stayed low the whole day. The stochastics trying to come back up, but the volume was just not there to justify any more price movement because people are scared now. They're like, okay, well, this company basically screwed us over, and we don't want to get back in. So if you're holding this stock up here, thinking it's going to ride, hopefully you had a trailing stop or some stop loss where you could have, it would have triggered and you would have sold at a minimum loss, rather than taking a $1 hit and then taking another 50, 60 cent hit after you've already taken that big hit. So that was something that I've never seen in real life. A lot of people that were trading this probably have not seen it in real life. But if you would have followed our rules, pre-market catalyst, you know that it's going to make some move in the morning. First bar was positive. That tells me that there were more buyers than sellers in the first 10 minutes. I want to be more conservative, draw my 2 lines, get in, and just make sure you have a really good stop loss or an idea of how much you want to take before you get out. You could have made anywhere from 15% in the first 10 minutes of you holding, to 8% if you want to be more conservative and get out, to 23% if you would have held up for the high of day. So that is going to be your range to get in and out of something like this. Easy in, easy out. But if you would have held it too long, you would have. Now, if you would have bought it at open, or bought it when we would have bought usually, you would have bought it at 340, and it came back at around 320, and it hit 340 again. So look at our lines. When it came back from being halted, it came back to that same resistance line around 340, and it came back down. So if you would have bought it when we were supposed to buy it, and you were holding it for a long-term trend, because this is big news, and I really believe that if this event did not happen, this would have been at $5, $6 already. The max you would have lost is nothing, because you would have broken even right when the stock came back. You probably lost 1% or less than 1%, depending on when your order would have gone through. But for you buying at the right time, it would not have been a loss. And that's interesting, because when it drops right to near where it opened, and that's where we have our resistance lines anyways. So you would have been protected somehow, because you would have bought at the right level. After IDXG, I don't see anything else, but let's chart CBLE for today. I think that's a good start to chart for today, because again, we have history for this stock, and we know what it's capable of and what it has done in the past. I'm going to double check to see if there's any news for it today. I don't think so. Let's see. CBLI. Again, low 4.4 million float and 18.5 million volume. That's a good sign. That means something's happening. No real news. There was some news yesterday morning, but nothing today. So I have no personal reason why this went up. But let's draw our lines anyway, and let's see if we would have gone in, because this would have popped up probably early morning on Finviz, because it went up after it opened up, and that's one of our criteria. So draw a line, long line, horizontal line, right here at the first box. Again, you want to be conservative, you can draw it up here. But we have all these moving averages that are going to be our resistance anyways. So these lines are good, but if I have the 8-day, 20-day, 50-day, 65-day lines around, that's going to automatically be my resistance. And I truly believe the reason why this stock jumped today is because it cleared a lot of the moving averages. It was a technical breakout. And when you see this white box right here, it's gold. Because at the same time, volume breakout, stochastics above, CCI looking great. Look at that beautiful MACD crossing. RSI is coming up, but not all the way there. That's okay. So we would have bought this right at the end of that white box. And again, you would have sold it if you want to be conservative right here when it touches the 8-day average for a 19% gain. Or if you feel like, hey, this is just a dip, it's going to keep going, you could have sold it at the next touch at 26%. If you want to keep going to a close, you could have stopped out at 32%. So 3 times where you could have sold. Now, the longer you hold, the more risk you're taking on. But for me personally, a 19% gain is good enough, and I'm happy with that, and I can go home and wait for tomorrow. I did not get into this today because I was in a meeting all morning, but this would have been on my scan, probably the first thing, probably the top 5 at least at the point where we would have bought it. It would have been the top 5 stocks on FinViz scan, and you would have known exactly to get into this and write this up to wherever it's going to go. I mean, all the stocks that we charted for the week right now, you would have gained on. I think the minimum we would have made is about 8% per stock, and the maximum being in the 30s or 40%. So we had potential for every single stock that was eligible to buy to make money. And I think if you did make money this whole week, great job. I did not make money this whole week. I actually lost more than I made. And charting it like this tells me why I lost money is because I did not chart correctly. My lines were not right, or my lines were non-existent. And I didn't follow the basic rules that we have is follow the resistance. If it breaks resistance, then you know to get in. And if you follow Warrior Trading, they have the same basic mentality of when they get in. They follow the resistance. They draw the high of day line. Once it crosses high of day, they go in. We just look at the close of the first 10 minutes to go in, and we already have the catalyst, right? So the one thing we didn't have in the prior months is the news factor. We always looked at these stocks after around lunchtime, after they've only made their first run and on their second run. But now we have the pre-market view with the news of why it's going up the way it is. So we know that, hey, there's a catalyst behind it. It's more likely to go up, or it's more likely to be more volatile. So if I see 10, 15, 20% profit, let's take it and let's wait for the next one to come in. And that has to be our mentality. We should not have the fear of missing out. And sometimes I'm guilty of this a lot of times too, is I'll sell for 10% and the stock goes up 30, 40%. And I keep looking back and saying, what if, what if, what if? And once you start doing that on your next trade, you're going to lose money because you're going to be like, well, I got burned last time. I'm going to hold a little bit longer. And there goes all your gains from the day before. So it's all psychology. It's all getting it done right the first time. And I think tomorrow morning, whatever catalyst we'll see, we'll do it right and we'll make some money. That's the goal. I think I have my 2-day trades back, so I have some bandwidth. Any of you guys have any questions? I know it's already past 10 o'clock. Now, I know there's a question about shorting. I'm going to do a separate video on shorting itself because that's a whole new topic. And I'm also going to do options and how to view options so you can better predict price action. But those two are going to be separate videos. I'm going to do on my own and post so you guys can view them on YouTube at your own time. Because it's going to take me at least 30 minutes each to go over the concept fully. And I'm working on top points right now to streamline the video and also give really good examples on what to look for.
Yeah, that's fine. That's fine. Thank you so much, though.
No problem, sir. No problem. And thank you. I know you post a lot on the group chat, giving us alerts on what to look for. And
Yeah.
a lot of those alerts, I mean, they're spot on. It's just that when you alert them, a lot of us don't have day trades available to buy them. So I can't get into them sometimes.
Like, yeah. Like, and it's like only like 10 cents too, like, you know, the profit margin too kind of thing. But like, but I try to like look for like more potential ones too, you know?
Yeah.
More companies. So let's see.
Yeah, and you know, as we go on, we're only going to get better. I mean, there's no way that we should not be making 100% return for a month.
Exactly.
That's the goal. I mean, the ones we charted today, just this week, you could have gone pretty close to 100%.
Yeah.
At least halfway there in 1 week. And these are stocks that we actively bought and sold. We just didn't buy and sell correctly.
True.
If we had done that, we could have made a lot of money this week. And if you make 25% a week, you just need 3 more for the month, and you're at 100%. Think about that, 100% a month. That's what most traders probably do in their lifetime, working at a big, fund and stuff like that. So that's the goal of turning your money around every single month. Any other questions? If not, I think we're pretty close to being done for the day.
Thanks, Stefan.
No problem, sir.
Yeah, thank you.
So tomorrow. Yeah. So tomorrow we'll I'm trying my best to log in earlier now so I can watch some pre-market action. And the first page on Finviz is what I always look at. So if there's positive news going on, we're going to chart it, and at 8:41, we're going to know if we're going to buy or not based on where it opens. So you have a 10-minute cushion from when it opens to when we buy. See what's going on.
All right.
Hi, guys. Good luck tomorrow.